for the sector, stock market in general. Daniel Flax, Neuberger, Berman, senior research analyst. How are you, Dan? Good to see you.
Good to see you too, Joe. Good morning.
I haven't asked you a question yet. Relax. Do you think that the multiple that we saw in the trailing 12 months it will be significantly higher than the next 12 months? What do you have the PE for the trailing number for Nvidia, and what do you have forward PE? Where is it right now?
Good morning, Joe. If we look out and think about what Nvidia is likely to earn over the next couple of years, I expect it to sustain an above market multiple. I can't give you a price target, but what I would say is the market at the moment is expecting revenue growth rates to decelerate. So the multiple on the stock has come down recently, and I expect it to remain around these levels over the next 12 to 18 months. I think what's important.
You don't have a number, Dan? You don't have an actual number?
No,
like what's the trailing price to earn? You cover this stock. So what's the? That's why you're here.
We're over 30 times, Joe. But the market trailing? At the moment. Pardon?
The trailing multiple's 30.
Joe, I'm gonna look out and think about what the company has earned, and then I'm gonna think through where the company can go. And so the multiple is clearly elevated. I think the market will continue to look out and think what it can grow at over the next 18 months. And I think the market is then going to think through its competitive positioning. So in my view, the market at this current moment is trying to think what these companies will look like coming out of this period. And so I expect Nvidia to remain very well positioned, and it's driven by their execution on their product roadmap. With Blackwell now, you have Rubin coming out next year. So you have the silicon on one side, and you have the developer community and the software that they're doing on the other side. So yes, it's an elevated multiple. It will remain so, but it has come down.
So what is the growth rate estimate you have for the quarter that they're reporting on Wednesday? What do earnings per share need to grow year over year, and what does revenue need to grow year over year? What are the expectations?
The expectations are very strong. You're going to have 60 at the moment. The company is capacity constrained. And so if you have 60, 70, 80% growth in a given quarter, including this quarter, what you're going to have happen is revenue growth is going to decelerate as you move through time here. And so you have been growing triple digits. You're going to see that revenue growth moderate. And the key here is that if they're going to execute on their product cycles, you'll have quarters constrained by supply at times. China, of course, has come out of the numbers. And we're going to look for 40, 50, 60% growth over the next several quarters. And if they're able to sustain that, the earnings and the free cash flow generation and the multiple on that, in our view, will continue to drive the stock forward from here.
So you don't have actual, at Neuberger Berman, you don't have actual numbers that you're expecting for Wednesday for what would be a positive versus what would be a negative on Nvidia? Like, earnings per growth or earnings per share growth. What would be good? What would be bad? Numbers.
We would have a data center number over $50 billion of revenue, which is our most important number. We expect EPS. I can't give you all our numbers, Joe. We can't share our proprietary information. But what I would say is that we expect earnings per share to beat. And what I would expect is we're going to have very healthy growth in the January quarter.